for joining us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a quick glimpse of today's highlights. Tensions are rising on the Korean peninsula following a long-range rocket launch from North Korea earlier this week. What kind of impact will this have on the South Korean economy and its markets? We'll sit down with an expert to talk about this. U.S. Fed chair points to China's slowdown and global market turbulence as growing risks to the U.S. economy, signaling the central bank will take a more cautious approach on future rate hikes. But first, in its strongest response yet to continued provocations from North Korea, Seoul has taken the first steps to suspend operations at the inter-Korean Kaesong Industrial Complex in the north. South Korean workers have entered the complex on this Thursday to start the process of withdrawal. Seoul is aiming to get all South Korean employees out of the complex within a week. The shutdown is in response to Pyongyang's nuclear test last month and a following long-range rocket launch earlier on Sunday. Out of the some 120 companies operating out of the park, 53 firms whose workers do not reside at the complex will start withdrawing first. Although business owners are not happy about the short notice they received about the suspension, the South Korean government says such a step is necessary as it believes operations at Kaesong have helped Pyongyang fund its weapons program. Factories at the complex employ some 54,000 North Korean workers, but according to Seoul's Unification Ministry, most of them did not report for duty this morning. With lingering uncertainties at home and abroad, analysts have been keeping an eye on how the South Korean market will react on the first day of trading after the extended holiday. While officials say that North Korea's latest provocation won't have much of an impact on the local market, external risks could. Take a look.
How will the South Korean market fare? With a series of internal and external risks emerging over the Lunar New Year holiday, analysts were closely watching the market as it reopened on Thursday. On the domestic front, North Korea launched a long-range rocket on Sunday. And in response, South Korea suspended operations at the inter-Korean Kaesong Industrial Complex, a major source of income for the North. While the general consensus is that Pyongyang's latest provocation will have a limited impact on the local financial market, the poor health of the global economy could deal it a significant blow. Major stock markets around the world have recently lost ground. Japan, for one, saw its benchmark Nikkei lose over 5% on Tuesday and another 2% on Wednesday. On top of that, the yen has been strengthening, contrary to expectations that the Bank of Japan's negative rate policy would weaken the local currency. Back in Seoul, shares closed sharply lower on Thursday, with the benchmark Kospi shedding over 2.9%. The local currency closed at 1,202 won against the greenback, weakening by roughly 0.3%. The country's finance ministry says it's keeping a close eye on local and global markets and vowed to convene a market review meeting every day until conditions stabilize.
And to tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you, Professor.
Pleasure to be here.
All right, so after the long 5-day holiday weekend, markets reopened today here in Korea. And like we just heard, we saw Korean shares plunge. Could this be because of North Korea's rocket launch on Sunday?
Well, North Korean's missile test is partially related to today's collapse in Korean stock market.
Okay.
There have been quite a few events over Lunar New Year's holidays, huge drops in Japanese stock market, and there are ongoing concerns from European countries and US and Japan. So these are major factors of today's drop.
And also adding to that, South Korea announced just yesterday that it's suspending operations at the joint Kaesong Industrial Complex over North Korea's latest long-range rocket launch. Now, how will this and the overall tensions affect the South Korean economy then?
Well, if I get to the result first, the closing Kaesong Industrial Complex is not much decrease in Korean economic activities because the productions from Kaesong Industrial Complex is only $400 million from last year, which is less than 0.01% of the Korean total GDP.
Okay.
But the owners of the facilities in Kaesong Industrial Complex should be helped because they are mostly medium and small-sized companies.
Right. Well, despite the fact that the shuttering of the Kaesong Industrial Complex came as a surprise to many of us, still, for now, the launch seems to be having a limited impact on the economy. So does the situation right now compare to before, previous situations when North Korea, I guess, went ahead with its provocations?
Well, it doesn't look that North Korean shock has a significant and long-lasting effects on Korean financial market, according to our experience with the previous examples. The typical patterns of the Korean financial market against North Korean shock is dropping for 1 or 2 days, then quickly that recovers to the normal level. So that become a pattern of the South Korean stock market's reaction.
All right, well, zooming out a bit, China's markets are closed all this week because of the Chinese Lunar New Year holiday. And also, like you said, Japan, although closed today, saw its shares continue to plunge, with the Nikkei falling almost 7% in 2 days. So will North Korea have implications for other Asian markets? And what are some of the factors that have battered Japan this week, like you mentioned earlier?
Well, I think global financial market is pretty much independent from North Korean affairs.
Okay.
If I have a talk with foreign investors, their logic is pretty straightforward. North Korea is one of the poorest countries in the world in terms of their personal income. So they have a strong military power, but they don't have enough resources to carry out the war against the neighbor countries. So that's why global financial market is pretty independent from North Korea.
And what about what happened in Japan?
Well, as far as to the best of my knowledge, in 2006, North Korean first atomic bomb test has a negative impact to Japanese stock market. That was the only exception.
All right. Okay, well, there's no doubt that North Korean provocations will add to growing geopolitical risks felt here in the local economy. Then, do you think Seoul's credit rating will actually be affected by this too?
Well, that, as long as that is limited only to military and diplomatic tensions, that doesn't affect the sovereign credit of South Korea. Actually, South Korean economic fundamentals are really strong compared to other countries. So there, to rating companies, there is no reason for readjusting sovereign credit of the South Korea.
So for now, what you're saying is this is only just going to have limited impact on the South Korean economy as well as the global economy. But then we can't leave out the fact that these increased tensions could lead to more provocations from North Korea now that Kaesong Industrial Complex has been shuttered, as well as, I guess, the international community could continue to respond to this rocket launch from North Korea. So do you think it's inevitable to see some kind of negative effects on the South Korean economy from this?
Well, the question whether today's North Korean shock is related to future Korean economic activities, it really depends on the details of the punishment to North Korea. For example, if neighbor countries punishes North Korea with the expansion of the no-flying zones, that affects the South Korean economic activities because that increases shipment, transportation cost.
All right. Thank you so much for coming in today, Professor.
Thank you very much.
U.S. Fed Chair Janet Yellen has signaled that the Fed might delay but not abandon planned interest rate hikes due to the ongoing risks facing the U.S. economy. Our Park Jong-won has the details.
Further rate hikes in the United States may be put on the back burner due to global uncertainties. Giving testimony before Congress, Federal Reserve Chair Janet Yellen said a variety of risks could pose a threat to U.S. growth and throw the economy off track.
Persistent weakness abroad exacerbated concerns about the outlook for global growth. These growth concerns, along with strong supply conditions and high inventories, contributed to the recent fall in the prices of oil and other commodities.
As for the major risk, Yellen singled out the uncertainty over China, saying it's weighing on the U.S. economy by rattling business sectors and has the potential to drag down other countries as well.
Should any of these downside risks materialize, foreign activity and demand for U.S. exports could weaken, and financial market conditions could tighten further.
Despite the concerns, Yellen said the U.S. will likely stay on a path of moderate growth that will allow the Fed to push ahead with gradual adjustments to its monetary policy. But she stressed there was no preset course. Yellen added that the labor market should continue to improve and inflation will eventually rise toward the Fed's target. In December last year, the Fed raised the benchmark interest rate by 25 basis points, the first rate hike since a global financial crisis and recession in 2007. Park Jong-hong, Business Daily.
Korea is the world's most research-intensive economy, according to figures released by the OECD. In 2014, the country invested just under 4.3% of its gross domestic product in R&D, ranking first out of the 34 OECD member countries and 7 other developing nations. This is over a twofold increase from 2.2% posted in 1995, with the rise attributed to greater industrial investment. Israel ranked second, followed by Japan. The members' average remained unchanged from 2013 at 2.37%. While Korea ranked first in the proportion of its GDP devoted to research, the nation's R&D spending of $72.3 billion was 1/5 that of China's. Korea's Hyundai and Kia Motors remain the 5th largest car manufacturers in the world in terms of global sales, unchanged from a year earlier. The two car makers sold a combined 8 million units in 2015, up 20,000 vehicles on year. Japan's Toyota topped the list, selling roughly 10 million units, followed by Volkswagen and General Motors. But the top 3 automakers all saw global sales dip, mainly due to weak demand from emerging markets like Brazil and Russia, in connections to falling commodity prices and sliding local currencies. Just a few years ago, it was common to see rows and rows of buses filled with Chinese tourists who come on group package tours. But a local tourism organization has found that there's been a drastic change in travel style among Chinese tourists over the past couple of years. Our Lee Ju-young tells us more.
Traveling in a group with a tour company or navigating around a foreign country alone both come with their own merits. But for Chinese tourists visiting Korea these days, their preferred mode of travel is pretty clear.
When we come with a group, we can't go where we want, and we're really limited in our activities.
Coming individually lets us eat what we want and go where we want without any time restrictions.
According to Korea Tourism Organization, the number of individual Chinese tourists to Korea doubled from 1.6 million in 2013 to over 3.5 million in 2015. And this year, more than 5.5 million individual Chinese visitors are estimated to enter the country. A breakdown of group to individual travelers further punctuates this trend. While 62% of inbound Chinese tourists chose to come as a group in 2013, in 2015, almost the same proportion of Chinese visitors preferred to come individually, displaying a dramatic shift. So in order to target the increasing number of individual travelers who get most of their information through mobile devices, Lotte Group has launched a smartphone application. It offers tourist translation services and transportation information, as well as mobile coupons for Lotte companies, the first time a conglomerate has rolled out a group-wide app service of this kind. With China's biggest holiday Chunjie that lasts for about 2 weeks now in full swing, Lotte says it plans on strengthening marketing across its many units to better target travelers looking abroad for a fun time. Lee Ju-young, Business Daily.
And that wraps it up for today. But we'll be back tomorrow with more business news that matters to you, so don't forget to tune in then. Thanks for watching, and goodbye for now.